Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Jordan Roy-Byrne, founder and editor of The Daily Gold. Now, Jordan, we're at the end of the month, and it was a good month for a lot of markets, but since we always focus on the precious metals, let's recap what happened in the precious metals this month. We have gold up about $123. That's what I'm seeing on my chart. I think it's actually up a little bit more than that. I'm looking at the spot market here. That is about a 7.5% move. Silver is up about 12% so far this month. And the US dollar, I think that was also a nice contributor to the pop in the metals. Well, that's down almost 5% this month. So some pretty big moves this month. And I think what's also noteworthy is the move down in the dollar and the move up in precious metals, kind of counter trend moves, because gold was down 7 months in a row heading into November. Jordan, summarize the monthly moves for us. What do you think is most important to note for especially the precious metals focused investor?
Well, I think if you look at the monthly candle charts, and by the way, I mean, this might not be obvious to some people, but when you're looking at monthly charts or even quarterly charts, I mean, you're looking at a long time frame. So what happens on a monthly chart is obviously quite a bit more significant than what you see on a daily or weekly chart. And if you're just looking at gold and silver, for example, the monthly charts, well, even just throughout the precious metal sector, the monthly charts are really encouraging. If you look at silver, in the monthly chart there, the monthly chart would argue it really started to bottom, I think, in July, if I'm looking at the right candle. If you look at the monthly chart and you look at the low in July, August, September, and then October, you saw a little bit of a move higher where the low was a little bit higher than the previous 3 months, and then you have the strong month this month. This isn't just a random move where the market's been going down and suddenly it had a really good month. If you look at the monthly chart of silver, it's been building for the last couple months. It's a little bit similar with gold, where if you look at September, you have a low, October, you have a low, and then this month you have a low. So you have 3 months where they've all tested the low 1600s. And now this month you have a big white candle, which has engulfed the previous 2 months. These are just really strong arguments that the bottom is in. I mean, it's real when you're looking at what's happened on these monthly charts. It's really difficult to make an argument that the bottom is not in. Like it's just when you look at the monthly charts, I don't know how you can really make a bearish case for the sector. And now that's just one thing. I mean, there's obviously many other things that support that. And if you look at GDX and GDXJ and SILJ and their action the last couple months, I mean, you could see it. There's been bottoming action with these monthly candles for the last several months. So it's not just an issue where the market's been going down and then suddenly it makes this really great white candle. Again, whether it be the metals or the miners, the monthly charts are arguing they've been trying to bottom for several months, and now finally we have, with the candles this month, it's really strong evidence that the bottom is in. So to me, that's really constructive. And then when I look at the stock market, because one concern is, well, they've been going up with the stock market, and that's true. But when I look at the candles for the S&P 500, they don't look the same as what you're seeing in gold and the mining stocks. So they look different. I mean, looking at the S&P, there's really stiff resistance on the monthly chart. I want to say in the area of the 4100s. And you don't have, unlike with precious metals, you don't have a base. You don't have this solid base of support over the last 3 or 4 months. You don't see that with the S&P 500. So looking at, that's another thing I like. With respect to the US dollar, I mean, you have a really nasty candle this month. So if you're looking at the dollar, 112 now on the monthly chart, that's really, really significant resistance. So I mean, you would need to see some, really surprising developments if the dollar were to break above 112 in the next couple of months. So looking at all these things, in addition to the macro fundamentals, I mean, I feel really good that the bottom is in for precious metals.
Well, Jordan, I'm sure some listeners will be happy to hear that. And there are some people in that same camp with you that think that the precious metals have a lot of different signals showing that the bottom is in. But there is the other camp that is still warning that lower lows are coming, or that there's a slow grind going into tax loss selling, and that the first quarter could still be perilous if the Fed keeps hiking. There's so many investors that we talk to, Jordan, that have all this cash on the sidelines. Some people are in 30%, 40%, 60% cash. They've been waiting to get back in. Are you talking to your subscribers about starting to scale back into quality stocks, or are you more interested in being in some of the larger ones that may turn first, or do some of these junior stocks that are just beat to crap look pretty good in your opinion?
Well, you have to take everything on a case by case basis. And the fact that there are some people who are hesitant and there are some people who have a lot of cash, I mean, that's what you see coming out of I can say a cyclical bear market. That's what you see coming out of a bottom. I mean, you see people who are hesitant. They're worried that this move is going to roll over, make a new low. And, people have a lot of cash. And, at times I've had too much cash. At times I've had not enough. Circling back to your question, yes, it's a case by case basis. I mean, I have some positions that have moved really well, then some stocks that haven't moved for whatever reason. But it's not just tax loss selling, but it's in some individual juniors. If it's a big holder or two, they're just giving up, and for whatever reason, funds that are getting redemptions. I mean, these are the things that happen when a market's at a bottom, or even if a market is just coming out of a bottom. And so there's a lot of individual juniors that, you look at the chart and maybe they've bottomed, but they're really lagging GDX and GDXJ. And so they're still susceptible to a big holder basically capitulating and getting out of the stock. So I'm seeing that in a good percentage of the stocks that I own. I mean, I'm basically all juniors, but I would say, there's some that are moving really well that are leaders, but at the same time, there's some that really haven't moved. And so that doesn't concern me. I think obviously you have to really be able to distinguish, with respect to the juniors that haven't moved, which are the ones that really have strong fundamentals and the best case to really move, versus ones that there's some flaws here, and that these aren't really they're going to lag and they're not going to move until you see gold back above 1900 or 2000. You have to look at everything on a case by case basis. I still think it's hard because, when somebody says, quality juniors, for one person, that could mean, yes, that's a quality junior. But then if you talk to somebody else, they could say, no, that's not a quality junior. But at least in my world, I think that you can still find some high quality or good quality juniors that really haven't moved that much. And at the same time, I mean, some juniors that have moved really nicely are pulling back a little bit this week. I mean, if you look at this move has been pretty good, but the GDX advanced decline line has not confirmed the strength that we've seen. This move, gold hasn't really outperformed the S&P during this move. So you could get a soft market here on the coming weeks. So I wouldn't try and wait for 20 or 30% declines. I mean, if it's juniors that have made a big move and they're correcting 10 or 15%, I would jump on that, provided you really like the fundamentals. And then if there's juniors where you like the fundamentals and you think they're higher quality and they just haven't moved yet, I would be ready to buy those in the next couple of weeks, because those that are being impacted by tax loss selling and a big holder bailing out, I think those could have a pretty good pop into January. And I mean, you could get real legs to that move if the market thinks that the Fed's done in January. You're going to get another lift to this rally.
So, Jordan, since we're looping back around to the juniors so much, what is the type of work that you think sets these companies apart? Is it new discoveries? Is it growing ounces in the ground? Is it acquiring more land? Is it building up new targets? What are a couple of the characteristics? And I know they change company to company, but there's only so much work these juniors can do. What do you think actually matters?
The most important thing is the economic potential of their asset or assets and how they can demonstrate that. So if we're looking at kind of larger juniors and not juniors that are, below 100 or 50 million market cap. So if we're looking at bigger juniors, it's all about the potential of their assets For example, I'm looking at which companies can get into production the easiest, with the lowest investment and versus the best economic return. I'm looking at those potential situations. And then when you're looking at ounces in the ground and exploration, it comes down to the economic potential of the assets. I mean, can they make a discovery or an acquisition or something that can change the economic potential of those assets? But to be honest, for most of these companies, because of the fact that costs have gone up a lot and gold and silver prices they're way down compared to 2 years ago. The margins, of course, have been really bad. So a lot of these things have been rendered optionality plays. I mean, everything can be considered an optionality play to some degree, but there are a lot of things out there that are optionality plays, and just they're not going to get a real lift until after tax loss selling or after gold can break through 1800 here. So I mean, I wish I could give a blanket answer on everything, but that's really the most important thing, is demonstrating the economic potential of these assets. And just quite frankly, a lot of them are even more than a couple years ago. Now a lot of them are going to be in the same boat with respect to the margins, where the margins are kind of okay, and because of what I said earlier, costs going up, metals prices going down. But when this rebound starts to gain some traction, then we could see those companies and almost everything start to get a lift.
Well, Jordan, since you focus mostly on the juniors in your services when you talk to subscribers, do you have a preference between the different buckets? There's the small producers, there's the development stories that are moving towards production, there's the advanced explorers that have ounces in the ground. They've got some proof in the pudding, but they've still got big drill programs. And then there's the grassroots drill plays that don't really have anything in the ground yet, but they're a little bit more speculative on the team and the drill plan. Any preference between those different categories?
Yeah, I mean, I don't know if this is a direct answer, but I think because right, I did an update last week. There's, for me, and granted, I'm just one person. There's hundreds and hundreds of juniors out there. So and I'm looking through more and more, and as many as I can find, and I'm not, quite done with that yet. But in my universe of, the 30 or 50 companies that I follow, to me, there's really 5 or 6. There's really 6 that I like the most, and that I think really have big potential over the next 2 or 3 years. And, obviously if we get a real bull market, the returns in these companies could be substantial, as they will for, almost everything or most things. To me, it's going back to the economic potential of their assets, who can get into production or grow production at, efficiently without destroying their capital structure. And then at the same time, who can add value through exploration? I mean, I don't want to give names out there, but there's definitely a few names that I think they're doing the kind of exploration work that can add value, be it in the short term or medium or long term. And I go back to look at what happened with Kirkland Lake, look at what happened with West Dome, look at what happened with K92 mining. Where you had these producers, because of exploration, they're able to get into production cheaply, or, they're able to grow their production cheaply. I think those types of situations, and I have, a top really 6 in my mind that I really, really favor. And so I think, to me, it's production growth, or if the company's not into production yet, who could get into production at a reasonable cost, and then at the same time grow in addition to that, be it through discovery and exploration, or maybe they have another project. So to me, that's basically the real sweet spot. It's if a junior has production growth potential, and at the same time they have strong exploration potential that can add more growth to that. I think that's the real sweet spot looking at those.
Okay. Jordan, thanks for the update here. Look, clearly you are encouraged by the moves that we've seen this month in the metals. Hopefully there is some uptrend that develops here that is a bit more longer lasting because it has been such a tough year, but that goes pretty much across the board for all investors. Next year is going to be critical to see, especially how we start off the year, but at least ending this year potentially on the front foot in a positive manner. Well, that could be encouraging as well. Jordan, thank you as always for your time. We'll chat next week. Have a great rest of your week.